We've got DV Manjunatha, the founder and MD at Emmvee Group, joining us on the show. Mr. Manjunath, hi, morning, and thanks for your time. Let's start by speaking about how this quarter has shaped up for you. You know, so much is happening in the sector that you operate in. There is also a lot of government support trickling in. Talk to us about some of the levers that have led to this kind of growth for you. And going ahead, do you believe that this 35% margin number is sustainable?
Thank you for having me to the ET now. As you rightly said, definitely the policy has also favored well, and the numbers what we have given to the first quarter is in line with what we have projected. If you see the earlier conversation what we had with you, and the going forward, I instead of I say an absolute. Percentage, I will stick to the absolute number, which we already said earlier also, and we are in line with that about 22,100,000 to 24,000 crores. This is the EBITDA level what we are looking into this financial year.
Right. Good morning, Mr. Manjunath. Meryl D'Souza here, also joining in on this conversation. I'm seeing effective solar cell capacity utilization has hit a record 83% in the first quarter of FY27. And you had previously guided for a phased transition from M10 to the G12R cells by the end of the first quarter. Could you share along with us an update on the progress of this, and what benefits do you expect this transition to bring going forward for your company?
So as we initially also said that we can able to reach the cell utilization up to 90%, we can able to reach. So we are in that line, and we have reached 83% in that M10R category. But as we already communicated, and you also said that G12R we have moved in the last month, that is in the month of June. So this will give us more utilization factor in the coming days or coming months. Reason is the pattern of that cell is going to be, as presently we are about 8.5 watt of the per cell what we are producing now, it's going to be 9.5. So that factor itself is going to be increased to the extent of the utilization, and also throughput going to be increased. And this will definitely, as this is the new technologies, and which is going to be need for the C&I and IPP, which is going to be made mandatory by the government of India from 1st June 2026.
Okay, understood. Mr. Manjunath, let's talk about your order book. That sits at an all-time high of 9.9 gigawatt right now after securing 1.48 gigawatt of inflows during the quarter gone by. Help us understand a couple of things over here. First, what is the execution timeline for this 9.9 gigawatt order book? What is the timeline for conversion to revenue? How much of this will trickle in into revenue in FY27 versus how much of it will spill over into FY28?
So around in the order book of 9.9 gigawatt, at least 50% will going to be executed in this financial year. Remaining 50% is going to be comes into the financial FY28. Apart from that, as you see that on quarter, we are increasing our order inflows. That will take care of our numbers what we need to achieve in this financial year.
Right, understood. Sir, one more thing. Last quarter, you had noted an inventory buildup which was necessary for the run rate of the operations, and you'd also mentioned it being mindful of converting this going forward. So can you just give us a quick update on how has the situation evolved in this quarter gone by, particularly with respect to cash flow in addition to the inventory levels as well?
The inventory level are in the same level now, and it is going to be, as we said earlier also, it is going to be better off in the coming quarters. And also you can see our top line also will going to be increase on quarter. The first quarter always going to be less quarter compared to the second, third and fourth quarter. That is how the standard our industry which will run, and that will definitely take care of inventory in a better position. And the cash flows, we are in a better position as our business models is earlier also I said very clearly, we do with either before cash before delivery the cash, or the LC backed with LCs. That will vary sometimes, because some of the customers will opt for the 60 days, 90 days, or 30 days of the LC usage period. That cost will be included in the price, that interest cost. So that will have the cycle of the cash flows. But cash flows, you see also this quarter, it is healthy, and we foresee the coming quarters also very healthy. With that only, our expansion, whatever the cap of Capex we are going to be put in, we can able to comfortably manage. And what we are intent to expand further, our capacity on the ingot and wafer, that LLM3 also can able to take care.
On that note, Mr. Manjunatha, in fact, that was exactly my next question. The wafer and ingot facility that you're talking about, this 9 gigawatt facility, the capex here is expected to be between 5 to 5,500 crore rupees. Talk to us about what the funding plan is over here, and are you looking at any more capex spends in the next couple of financial years? If so, what would the funding mix look like? How much would be internal and how much would be via debt?
So this year, as we already said, 5,500 crores we are spending for the present expansion, and in that we have already spent about 60% of orders has been already given. And yes, then further the ingot and wafer manufacturing also we are expecting between 5,500 to 6,000 crores of capex. Here we see comfortably we are, as of today, if our cash flow see, we are most of the things we are going to be covering the internal accrual. We may definitely opt for some of the debt or some other revenues or the capex rise, which whatever it going to be, we are going to be below 1 in the debt to equity ratios. Less than 1, I can say 0.6 to 0.75.
Could you quantify this debt that you are looking to overtake in terms of your capex spends? Any number if you can help us with?
Which is going to be very less. The first present one, we have taken about 60% of the debt we have taken, 40 has been internal source. In the coming one, it's going to be much better. We may opt definitely below the levels.
Okay. And are you on track for your FY28 annual install capacity target? If I have it right, for modules that's 16.3 gigawatt, for cells that's 8.9 gigawatts. Are we on track for that?
Yeah, definitely. We are in full track, and December we are going to commission the module line, which is going to be take up to the 16.3 gigawatt of capacity, and cell is going to be completed by March, which is going to be take to the 9 gigawatt of capacity. And we are in full track, and the construction as well as the expansion facility and the other things is going in a right manner as of today.
So fully on track to meet your capex guidance then. But sir, I also want to bring up, you have previously spoken about exports being a long-term opportunity for the company. Now, given the current global demand environment and the current macro outlook, how are you now seeing meaningful opportunities in the international markets for your company? And can you also expand on the target mix that you are planning to achieve in terms of international exports?
So that is going to be added advantages. If you see now, the Europe has been coming to the new NZIA law, which is going to be take care of at least 10% to 30% of their installed capacity and the renewable energy, especially in the solar, has to come from other than the China. So which India, especially players like us, where Emmvee has been started selling the modules in 2006 onwards to the 100% my capacity to European countries. So that will definitely going to be boost us furthermore. It is going to be upside, which is the law has been implemented in few of the countries now. Italy has been already done, and France and Paris. These people has already moved in a advanced stage. So that will going to be added advantages. So export always going to be good for the India, but time it will take some time to reach. But this year we see some growth may come into the picture.
Okay, understood. And we'll be watching out for all of these developments in your business. Mr. Manjunatha, thank you so much for your time today. Good to be speaking with you.
Thank you very much.
Thank you so much.